Something massive is unfolding right now. The financial system that we've known for nearly a century is being reset as a new global monetary order takes shape. An order where gold, not the dollar, is fast becoming the foundation of the new system. But just like every reset throughout history, this won't just impact central banks or Wall Street. It will impact your savings, your retirement, and even the standard of living as we know it. For most people, this is an invisible force at work, and those who aren't prepared will be left vulnerable. But those who understand this shift, and the historical data behind it, can position now and be prepared for what's coming next. Because when paper wealth disappears, real wealth always reveals itself. This is the economics X analysis, which is why through history in every major currency reset, gold and silver, real, tangible, physical gold and silver, have exposed the difference between a true store of value and empty paper promises. Today, I'm going to break down exactly how both gold and silver function during a currency reset, using the hard lessons of history as our guide. But before breaking down their roles and what you can expect to happen next, it's critical to define what a reset actually is. A reset isn't some random, chaotic event. It's when a central bank or government changes the rules, the existing framework of a system, usually by devaluing or revaluing the currency. This happens most often as a result of an unsustainable debt burden or a total collapse of confidence in the currency itself. But what we are living through right now is an accelerating reset. See, a reset is both a process and an event. For the US dollar, it's a drawn-out process, marked by pivotal events that move it along, and it will culminate with a final devaluation or revaluation of the currency, potentially leaving the dollar worth next to nothing. This isn't the first reset we've seen. In fact, it's far from it. History shows us what happens to a currency, gold and silver, in each and every one, in places like Weimar, Germany, Venezuela, Cyprus, and Lebanon. The list goes on and on. The key difference today is that the dollar is the global reserve currency, meaning every other major country and institution holds and uses the dollar for trade and as a store of value. And this has given people a false sense of security, a dangerous belief that a reset could never happen here in the US, that it could never happen to the dollar, but that could not be farther from the truth. In fact, the very status of the dollar as the global reserve currency tells us two things. Number one, it has prolonged the reset. It has made this process longer than usual because the world has been forced to accept our currency for so long. But number two, and more importantly, as this reset continues to accelerate, the fallout is going to be on a much larger scale than any of those past examples. In fact, for anyone out there who still isn't sure, in the last century, the US has officially revalued the dollar, devalued the dollar, and even defaulted on its debt, contrary to popular opinion. These are facts of history that we will talk more about in just a moment. This means it is that much more important to protect yourself. Let's look at the functionality of physical gold and silver throughout these currency resets, starting with Weimar Germany, a very famous and terrifying example. In 1918, the prices of goods and services rose so quickly, the inflation was so bad, that just 5 years later, in 1923, people required wheelbarrows of cash just to buy regular everyday items. Think about the speed of that decline. In November 1918, 1 German mark would buy you 1 loaf of bread. But just 5 years later, the same 1 loaf of bread now cost 200 billion German marks. During this same time period, an ounce of silver in 1918 could buy you about 12 loaves of bread. Over the next 5 years, the mark price of silver went from about 12 German marks to almost 55 billion German marks. This means the same ounce of silver could still buy you multiple loaves, about 2.5, by 1923. It reduced its purchasing power in terms of bread, but it was still used as a daily driver for many. Silver was how people survived, but those with gold were able to thrive. In 1918, 1 ounce of gold could buy you roughly 170 loaves of bread. It was officially priced at 170 German marks at the time. Just 5 years later, however, that same ounce of gold was priced at 87 trillion German marks. This amount could now buy you 435 loaves of bread if you wanted to. In fact, gold is what people used for their freedom to move, to buy real estate, and to create new opportunity. Gold is what allowed you to thrive on the other side of the reset. Silver allowed you to survive, but gold allowed you to thrive. We have seen this pattern repeat time and time again with resets throughout history. Brazil is another striking example, suffering from severe hyperinflation in the late 1980s to early 1990s. At one point, inflation reached over 2,000%, and in the span of just 1 year, you had the price of silver jump up almost 1,000,000% in the local currency. But gold jumped up 1.3 million%, and once again, we saw the distinction. People were using silver for their daily purchases and gold to not only protect their wealth, but to create generational wealth on the other side of the reset. And although there are many examples, one that really keeps me up at night is Venezuela. Venezuela over the years has undergone multiple official currency revaluations. They call it lopping off zeros, and what I mean by that is they quite literally revalue the currency to a lower amount. Let's say you have $1 million in your bank account. Well, the US government decides they're going to lop off 3 zeros. What does that mean for you? You wake up today with $1 million. Tomorrow that goes into effect, and your bank account only has $1,000 in it. And before you say, oh, well, they can't do that, that's illegal. No, they absolutely can do it, because the dollar has no intrinsic value. It's backed by the faith and credit of the US government, and if they decree that it should be a different valuation, they are well within their rights to do it. We have seen this happen time and time again in other countries, and as I said, Venezuela has gone through multiple lopping off of zeros over time. During this process, the fiat currency, the government-issued currency, like the US dollar, of course was reduced to its intrinsic value, which is zero, a big fat goose egg. Whereas you have silver and gold being used as actual currency by the population, it's the true money. You have silver being used for everyday purchases, and you have gold that truly protected wealth through these resets. And this is a lesson the central banks are already learning. It's why they're buying gold, like it's cheap. They're buying as much physical gold as they can get their hands on. Why? Because they understand that the dollar is going to continue to lose its power. Whereas gold in these resets, well, what we're seeing today, it is still cheap compared to how high it's gone in all of these other major currency resets. We are still on the early side of the dollar failure and what could come next, which means it's absolutely not too late to own gold, to buy gold. And if you already do have gold, make sure you hold on to it, because what you bought it for has not happened yet. Now, if you ask me, because I get asked all the time, should I own silver or gold? Which one? I personally own both, and I think everyone should have physical silver and gold. Now, as far as how much you should have or how you position yourself and how you make sure you have a strategy for what's coming next, I always ask you, what are you preparing for? Because like we just saw, silver and gold have different functionalities. Silver is going to be used more for daily trading and purchases, whereas gold is going to be creating opportunity and freedom on the other side of the reset. That's what we have seen throughout history, and that is what we are again already seeing today. In fact, if you go back in time, even as far as the Roman Empire, the gold-to-silver ratio, or how many ounces of silver it would take to buy 1 ounce of gold, at that time it was 12-to-1. You needed 12 ounces of silver to buy 1 ounce of gold. It's never been a 1-to-1 ratio. Why is that? Because gold has always been valued higher than silver. Now, I know many people out there are probably saying, wait a second. Silver is undervalued, right? It's been suppressed. And I don't disagree with you. I believe both silver and gold should be valued far higher than the spot price is today. And I also understand that the gold-to-silver ratio is higher today than it has been throughout many times in history, which makes many believe that silver price is going to go up, and I believe it might as well. But also, silver throughout history, when I look at its functionality, is a dual metal. It has both monetary and industrial purpose, whereas gold is purely monetary. And if I am preparing for the reset, as I know many of you are out there preparing, if you are preparing for the government to continue to add to our debt to devalue the dollar, which again is the global reserve currency, so what we're gearing up for is even worse than the examples I showed before. Well, if you study those, you can see how they move. And gold and silver always move together until they don't. And at a certain point, gold always takes off as the true wealth protector against these currency revaluations that we have studied here at ITM for years.